Okay, welcome back. And this week in focus will be the FOMC and the outcome of that. Hopes of a December rate cut have strengthened. Firmer consumer spending data with markets pricing an 89% chance of a 25 bips move. But analysts, in fact, expect multiple descents as tariff-driven inflation risks collide with signs of cooling labor markets. The Fed Watch tool points to a cut of 25 bips. Of course, we spoke about that. But Powell has warned that nothing is guaranteed. Kanishka here with what to expect.
Absolutely. So all eyes are going to be on the US Federal Reserve, which is beginning its policy meeting, and the expectations are clear for this year. A Reuters poll is expecting the Fed to cut about 25 basis points rate cut that's expected. That's continuing its gradual easing cycle. Now, this move is aimed at supporting the softening, that is the cooling labor market, which has shown signs of softening over the past few months. But the outlook isn't without a caution, really. Now, analysts have flagged uncertainties around tax cut package, the spending bill, the ongoing tariff questions, and broader concerns about the central bank's independence. Apart from that, inflation that also remains sticky. Markets are expecting the Fed's preferred gauge, that is the PCE index, to stay above that 2% mark through FY27. This would limit the scope of aggressive cuts going forward. Also, a quick reminder from the Fed's last meeting. Now, economic activity was expanding at a moderate pace. Job gains had slowed and unemployment that had inched up. However, it did remain low. The Fed had then highlighted downside risk to employment and elevated uncertainty around the economic outlook. It cut rates by 25 basis points, then bringing the federal funds target to that 3.75 to 4% level. Rate cutting has been steady over the past 2 years. That's moving from a 5.5% rate in August 2024 to 4% in October 2025. So now the focus is going to be not just on the rates, but also on the tone. That is, how confident is the Fed about inflation, how worried is about the labor market, and how the fiscal and tariff uncertainty is going to shape the future of US economy. So these are all the factors and commentary that we are going to watch out for as far as Fed Powell's Federal Reserve Chairman Powell's commentary is concerned. So we'll be watching out for all of that. And for now, a 25 basis points rate cut is what is expected as of now.
Right, okay, Kanishka, we'll leave it at that. A lot of triggers are waiting, and of course, the next big one is going to be the Fed policy outcome. But for now,